World's richest trader and investor Warren Buffett. How did he get to where he is today? Well, before we talk about that, we need to understand who he actually is. Warren Edward Buffett, his full name, was born on the 30th of August in 1930. He's actually 90 years old now, and he's an investor, philanthropist, and most commonly known for his position as a CEO of Berkshire Hathaway, where he was actually considered one of the world's most successful investors. Now, as of this year, he has a net worth of roughly $80 billion. And to put that into perspective, the average American household net worth is about $97,000. Now, add a few zeros, add 6 zeros onto that number, and you've got a good idea of how much he's excelled his gains in comparison to the average person. So we know he's earned a lot throughout his life. But what's his story? Warren Buffett was born and raised in Omaha, Nebraska. He was the son of Congressman Howard Buffett, who was elected to the first 4 terms in the United States Congress, which then moved his family and Warren to Washington in 1942. This is where Warren Buffett went and started his early education, graduating from Woodrow Wilson High School in 1947. Now, a fun fact, his senior yearbook picture actually mentions he likes math and he's going to be a future stockbroker. He was right on that math part, not being so much as a measly old stockbroker though. After Buffett graduated and finished high school, his side businesses and investments did really well. He wanted to skip altogether going to college and go straight into business, but this was quickly overruled by his father Howard, who told him, no, you have to go to college. However, Buffett had a very early interest in investing and business in general from a very young age. One of the books that really inspired him to get into it was 1000 Ways to Make $1,000. Throughout high school, Buffett did what a lot of high school kids did to make money, which was delivering newspapers. But on top of this, he also sold golf balls, he sold stamps, and also detailed cars. One of the big money makers for Buffett was buying a pinball machine with his friend, spending $25 and placed it in local barbershop. What they did was set up several more machines in different barbershops across Omaha and then ended up selling the business for over $1,200. And at that time, that was a lot of money. It was probably around $10,000 in the value today. So how did Buffett's investing career start? Well, it all began when Buffett would spend lots of time in the customer's lounge of a regional stock brokerage near his father's own broker office. When Buffett was 10 years old on a trip to New York City, he actually visited New York Stock Exchange, which really sparked his interest. He bought 3 shares when he at the age of 11 and 3 more shares for his sister. And when Buffett was just the age of 15, he was making $175 a month, not from stock gains though, but from delivering Washington Post newspapers. His first big investment was when he put money into a business owned by his father, a 40-acre farm, spending that $1,200 of his savings. By the time Buffett finished college, he actually accumulated just under $10,000, and in today's money that's around over $100,000. So at this point, Buffett again wanted to continue with his business ventures and investments, but then again, his father pressured him into education. In 1947, Buffett entered the Wharton School of University of Pennsylvania to study business administration. He was later rejected by Harvard Business School, so went and enrolled in Columbia Business School of Columbia University because of a special person that taught there, Benjamin Graham. This was an investor that was highly influential for Buffett at a young age, and he still practices his teachings to this date. Here, Buffett earned a master's in economics in 1951. Afterwards, Buffett went on to work at Buffett Folk & Co. as an investment salesman for a few years. Then went to Graham Newmap Corp. As a securities analyst for 2 years. It wasn't actually until 1970 he became CEO and chairman of his well-known company, Berkshire Hathaway. But how did he get there? How did he become the CEO of Berkshire? Well, by first becoming a millionaire from his partnerships, which made him over $1 million at the time. He took this money from his partnerships and invested it into a textile manufacturing company at the time known as Berkshire Hathaway. And a lot went on in the next 25 years with Berkshire Hathaway and Buffett's investments. He actually ended up saying that Berkshire was one of the worst investments he made and sold off most of the textile parts of the business and ended up moving the company into the insurance sector. Over the next 20 years afterwards, Buffett and Berkshire invested into a handful of companies, just like the Washington Post, ABC Capitals, and a big one, Coca-Cola. That's really how Buffett made his millions. But how did he get to that billionaire status, that $80 billion? This didn't actually occur until Berkshire Hathaway started selling Class A shares in 1990, with the market closing at $7,175 a share. This raised enough capital which allowed Buffett to start really exponentially growing his money. When it came to 2008, while most of the world was dipping into a recession, Buffett was actually the richest person in the world with an estimated net worth of $62 billion. And some of the big bets and trades he made during that time was on the likes of General Electric, where he bought 3 million shares at over $22 a share over the next 5 years. And this is where he made a huge killing. So that's how Warren Buffett made his billion-dollar status. But what can we learn from his story? Well, Buffett himself and his mentor Benjamin Graham are massive supporters of index funds. More specifically, they're supporters of index funds for people who are not interested in actively managing their own money, or they just don't have the time. He even advises individuals and institutions to move into low-cost index funds that track a broad and diverse amount of stocks. And what this means for a normal person, in a nutshell, is that you shouldn't really be looking to pick individual stocks yourself to trade if you don't have the time to put into it and you don't want to put the effort into actually choosing specific stocks. Rather, the normal person should be passively investing into index funds, which would yield a greater return over a longer period of time for a normal person. And that pretty much sums up Warren Buffett's story and investment principles on how he's made money throughout his life and how you can start applying those same rules towards your own trading and investing. If you are interested in getting into trading specifically in the Forex markets, we are running a free web class. You can go ahead and click that link in the description below. Make sure to take notes. It's about 2 hours long and we're not covering any type of pattern analysis, technical analysis. We're actually going to go over the fundamental economic analysis of countries. So definitely go ahead and take notes there. That pretty much sums up the story of Warren Buffett. If you've enjoyed watching it and learning some lessons, go ahead and hit that subscribe button for more stories in the future. It's Matty from Logic FX, and I'll see you in the next one.